Want to know how real estate investors and the wealthy avoid paying capital gains taxes when they sell? Well, guess what? You could use the same exact strategies they use to keep more of your hard-earned dollars in your pocket. In this video, I'm breaking down 3 powerful ways that you can pay $0 in capital gains taxes. The first one's going to be cash out refinancing. Then we're going to hit the 1031 exchange, and then we're going to wrap it all up with a step up in basis. If you're serious about building wealth with real estate while minimizing taxes, then stick around because this is the type of stuff that the rich do not want you to know about. Hi, my name is Thomas Castelli, and I help high-income earners, business owners, and real estate investors like you legally reduce your tax bill by using the tax code to your advantage. Before we dive right in, be sure to hit the like button and subscribe to the channel so you don't miss out on future tax-saving strategies. And for even more exclusive tips, join our newsletter. The link is in the description to this video. And if you have any questions throughout the video, go ahead and drop them in the comments. I'm here to help. And without further ado, we're going to jump right into today's video. First, let's quickly cover how capital gains taxes work. When you sell an investment property for a profit, the IRS wants their cut, and your capital gains rate will depend on how long you've held the property and your income level. If you held the property for less than a year, you're going to pay tax at the short-term capital gains rates, which is up to 37%, just like your regular income. Ouch, I know that hurts. More than a year, you're going to pay long-term capital gains rates, which ranges from 0 to 20% depending on your level of income. For high-income earners, if you're earning more than $533,400, as of 2025, you're going to be in the 20% tax rate. Oh yeah, and we cannot forget about the net investment income tax, also known as NIT, which is an additional 3.8% tax on capital gains if you make over a certain amount. There's also going to be depreciation recapture taxes. You can learn more about that in other videos here on the channel. Just note the strategies we discuss in today's video will work on both capital gains and depreciation recapture. So how do you legally avoid paying capital gains and depreciation recapture taxes? Let's get right into it. All right, so strategy number 1, cash out refinancing. Instead of selling your property and triggering a taxable capital gain, you can pull out your money tax-free using a refinance. For example, let's say you bought a rental property for $300,000 and over time it appreciated to $500,000. If you sell, you'd have a $200,000 capital gain. Instead, you do a cash out refinance, borrowing up to 75 to 80% of the home's new value, and you can take out $200,000 or more, but because it's a loan, the money is tax-free. The best part is you still own the property, you can still collect rental income, and still get the tax benefits of depreciation. Smart investors use this strategy over and over again to grow their portfolio without selling and without incurring capital gains taxes. But what if you need to sell? Well, that's where the 1031 exchange comes in. The 1031 exchange is a game changer for real estate investors because it allows you to sell a property and reinvest 100% of the proceeds into another property without paying capital gains taxes. Here's how it works. You sell your investment property, then you reinvest the proceeds into another rental property within 180 days. This defers your capital gains taxes indefinitely. For example, if you sell rental property, if you owed $100,000 in capital gains taxes, well, instead of paying the IRS, you roll that money into a bigger and better property, completely tax-free, which can mean up to $400,000 in additional purchasing power. And guess what? You can keep doing 1031 exchanges again and again, deferring taxes forever. But what happens when you need to cash out for good? Well, that's where the step up in basis comes in. The step up in basis is the final piece of the puzzle, and it's how wealthy families pass down real estate tax-free. When you pass away, your heirs will inherit your property with a step up in basis, meaning the property's tax basis resets at its current market value instead of what you originally paid. So let's say you bought a rental property for $200,000 and over the years it appreciates to $1 million. If you were to sell that during your lifetime, you pay capital gains taxes of $800,000 in profit in addition to depreciation recapture taxes. But if you hold on to that property until you pass away, your heirs inherit it at its new market value, let's say $1 million. And if they sell for $1 million, they pay $0 in capital gains taxes. That's why smart investors use cash out refinances to build wealth tax-free throughout their lifetime, use 1031 exchanges to defer capital gains taxes when they do need to sell property, and then they pass down their properties to their heirs at a stepped-up basis, wiping out all the capital gains taxes they should have paid. This is exactly how generational wealth is built. All right, now let's recap how to legally pay $0 in capital gains taxes. First, use a cash out refinance to pull out money from your properties tax-free without selling. 2, when you do need to sell, use a 1031 exchange to defer taxes and grow your portfolio. 3, hold your properties long-term and pass them along to your heirs to eliminate capital gains taxes and depreciation recapture forever. If you want to maximize your tax savings, you do need a plan, so be sure to talk to a real estate savvy CPA before making any big moves. Now I want to hear from you. Which one of these strategies do you plan on using? Drop a comment below to let me know. And also, before you go, don't forget to subscribe to the channel so you don't miss out on future tax saving strategies. And if you want personalized tax strategies, book a 30-minute discovery call with our team. The link is in the description to this video. Thanks for watching, and I'll see you in the next video.